In Forex, we very often have what we call the Big Five, which has been expanded to the Big Eight. What I've done is I've left the biggest five ones on the top, and the next three are the contenders to make up the Big Eight. It's not too important to remember all of the nicknames up front. You'll see that we do get used to it. At one stage, traders were using pretty much only the nicknames, saying buck, fiber, cable, and that sort of thing. Currently, we usually refer to just the currency, so we'll say euro dollar, we'll say Aussie dollar, and things like that. The one nickname that is still quite popular on forums is the cable. And it's quite interesting because they got the name the cable from the first transatlantic telegraph cable, which connected New York to London. So it set up the two stock exchange. So it's affectionately called the cable. The fiber is the new version of the cable, which is the euro dollar. Please take note of some pairs when we say the Aussie dollar. We actually mean the Australian dollar versus the US dollar. Market size and liquidity. The key point here is that there is no physical market or central exchange. If you look at how a stock exchange works, where you have a central place where people have to trade through, once upon a time they would have to sit on the trading floor, but now they can connect to it, but still there is a central exchange point. Whereas in Forex, we have about 3,500 world banks that are interconnected. Through various channels, they are all trading between each other, and not just people trading Forex for profit. The bulk of exchanges are still from imports and exports. Through all these different types of channels, there are constantly trades taking place between large international banks and even the smaller private banks. You are unwittingly connected to thousands of exchange points. This gives us the benefit of not having set trading hours. We can take weekends off because, well, you can't trade on weekends. Because our only connection we need is to our broker, you could effectively trade from anywhere as long as you have a reliable internet connection. The top stock exchanges' total trading volume is approximately $300 billion a day, which is a fair average. Some days are obviously a lot more and some days are a bit less. Forex trades approximately $4 trillion per day. On average, that's 13 times the size of the top stock exchanges all put together. Of the 4 trillion, 1.4 trillion is retail Forex traders. The US dollar makes up nearly 85% of all trades, so it is by far the largest player in the market. This chart is just to drive home how much the US dollar dominates the market. We can quickly see that the most traded currency pair would obviously be the euro dollar. Please note that this might not always be the case for every hour of every day. This is just an average over time. One thing a lot of people do notice up front and get confused is that these percentages add up to more than 100%. This is because you have two currencies in a transaction. So for example, if you're trading the euro versus the dollar, you have both the US dollar and the euro involved. Speculation means that we are guessing. It's not a nice phrase to hear. Guesstimate might be a little bit better. The way I see it is that we are basically starting off with a 50-50 chance of guessing the right direction when the markets are moving. Then, as we start applying our knowledge, we start shifting the chances of winning the trade in our favor. Adding indicators, trading the direction of the market, looking at news events, and also how to correctly place stop losses and take profits all increase our chance of becoming successful. Please keep in mind that there is no such thing as a sure thing, and anyone advertising a guaranteed system or trade is most likely going to cost you a lot more than trading cautiously. High liquidity means that there is always someone buying and selling. There's always someone willing to buy what you are selling, which is something a lot of stock traders wish they had. Even if you had made a huge profit off a trade and it's time to close, thousands of other traders are also trying to get out of the trade. But because we are trading in the same space as the trillions of US dollars that are dealing with imports and exports, we can close our deal. It is rare for a trade to take longer than a few seconds to close.